Are you overpaying the IRS, mixing personal and business expenses, or guessing on your tax strategy? These common mistakes are draining small business owners, and most don't even know it. If you're doing your own taxes without a plan, or you don't have a CFO in your corner, this video could save you thousands. I am Kristen Gunderson with Gunderson CFO and Bookkeeping, and I am a Main Street certified tax advisor under Mark J. Kohler. So what I want to do is talk to you today about why this matters. These mistakes could cost you money and your peace of mind. The IRS does not accept ignorance as an excuse. And fixing these mistakes now could save you thousands of dollars on your taxes. So what is the number one mistake that small business owners make? Is they mix their business and their personal finances together. They have a business bank account and they're running all kinds of personal stuff through it, or they haven't opened up a business bank account yet and they're putting all of their business income and expenses into their personal bank accounts. They're also doing the same thing with their credit cards. So you need to stop mixing your business and your personal finances. Open up that business bank account, open up that business credit card. If you can't get a business credit card, make sure you have one that has a zero balance on it and use it solely just for business purchases. Don't use any personal items on it, and let the business pay for that. And that will be your business bank account if you cannot get a business credit card. But otherwise, you need to stop commingling those accounts. One reason is that it's not at risk. Another thing is if you have an LLC, the whole reason for opening up an LLC is to protect you personally if your business gets sued. If you're commingling, you're piercing that corporate veil. And if you were to get sued, you're going to be going to trial. And that's the number one thing that they're going to be looking at is all your business and your credit card accounts and seeing are they business? Or are you putting a whole bunch of personal in there too? Because if you're not treating it as a business, that corporate veil is pierced and it opens you up. They're like, well, you're not treating it as a business. So now everything that you're trying to protect on your personal side is also up for risk. And also another thing that you need to do is say you are using a whole bunch of personal, you are paying for, because the business is new. So unless you can put a whole bunch of money into your business to get it going, you might need to pay for some things that are business on your personal. Well, what you will want to do is you want to track those reimbursements through an accountable plan. So you'll basically, like if you were working for corporate world, you would have to, pay for your items out of your personal, but then you'd keep all of your receipts and submit an expense report, and then the company would reimburse you. You got to do the same thing if you're needing to do that for your business when you're getting started. Another mistake that small businesses do is they're not paying in their estimated taxes. Basically, if you owe more than $1,000 when you get your tax return done, the IRS wants you to start paying your estimated quarterly taxes. So if you don't do that, there's penalties and interest that will start accruing because you're supposed to pay for it, pay those taxes throughout the year, quarterly. And sometimes you might need to work with a tax advisor to help you estimate what you should be paying in. Now, if you are using a software like QuickBooks Online, you should be able to run your financials. A lot of times, the other mistake I see people make is that they're not doing their bookkeeping. They haven't done their bookkeeping since last year, or they haven't reconciled anything, or the stuff is in there, but it's not done yet. You should have current financials at all times. We should be able to log into your QuickBooks or whatever software you're using and be able to get what your income and expenses are up to current, or at least through last month, right? And we need that in order to project what your income is. because we're paying off of your net income of what your estimated quarterly taxes should be. Another mistake I see people make is they do not choose the right entity. Sometimes businesses start off as a sole prop, and that means they're just one person. They might have a DBA, so that would be a sole prop. And they could even be a LLC as a sole prop. If once you start making a lot of money and you're paying a lot of money in taxes, it might be time to switch you over to an S corp. That way it will save you a lot of money in taxes. It'll save you the Social Security and Medicare taxes, and then you'll be able to go on a W-2. I see some people where they start off as an S corp right away and they're not making any money. And there's a lot of expenses that go into an S corp that if you're not making enough money, it might not be worth all the extra expenses that you have to do. The tax savings might not be there. So really getting with a professional to figure out, is it the right time to switch from a sole prop to an S corp? Or even if you might be a partnership still and it might be time for to switch to an S corp. So not choosing the right entity from the get-go might be costing you a lot of money in taxes. Another error I see people make is they're not keeping proper records. Again, you want to be doing your stuff in QuickBooks, or there's Xero, there's other accounting softwares out there. You need to be doing your bookkeeping. You need to be reconciling everything. And a lot of times people think that they, as long as they have the bank statements or the credit card statements, they're good. It's not good. The IRS, if you get audited, they will be pulling a sample and they will be asking to see those receipts. Anything that's $75 or more, the IRS is going to want to see receipts for to make sure that it's a legit business purchase. So make sure that you're keeping your receipts. If you use QuickBooks Online, you can have an app on your phone. Let me see that. So it looks just like this app right here, QuickBooks Online. And then you open it up, and then one of the very first things that you'll come up with is Snap Receipt. So while you are out at the restaurant, if you're getting gas, whatever, you literally just hit that, you snap a receipt, it shows up like you're taking a picture, and then you don't need to worry about that receipt anymore. There's other items, there's other apps out there that you can use if you're not using QuickBooks Online, like HubDoc. You can use that to be able to store your receipts, but you really need to store receipts and you need to be able to keep notes on them, especially if you're dining out. The IRS wants to know who you ate with, where you ate. Make sure to include the tip on there and what business y'all talked about. And if it's a prospect, they want to know if you got that business down the road. So especially if you're dining out, you will want to keep those and write those notes on the receipt of what that is, what you were doing. So that's really important. Another mistake I see people do is they do their own taxes. They have no strategy. Sometimes their books are bad, sometimes their books are okay or good, but they're doing their taxes, they're getting no guidance. Small business owners are really, really great at doing what they're doing. They're really great at growing their business, doing what they're doing. Could be in construction, whatever your small business is, you are great at doing that. But it doesn't mean that you're great at everything else. And one of those items may be taxes and bookkeeping. You don't know what you don't know. And a lot of times you're watching TikTok like, oh, I can pay my kids, and oh, there's the Augusta rule, and what are some other ones out there? Oh, I can rent to myself. Like they're seeing these things. However, there's so many rules that go along with those strategies that if you don't implement them correctly, and they may not even be a good strategy for you, what you're seeing on TikTok is an advertisement. It's a short, 30-second, 1-minute thing that they want you to come in and be their client. It's not everyone qualifies for this and this is 100%. There's things that need to be implemented. You need to make sure that you're doing things correctly, because if you get audited If you do it 95% right, but 5% of it's wrong, they throw it out. So you need to make sure you're doing everything 100% correctly. So the mistake I see is people doing their taxes. They have no idea what they're doing. They could be missing out on credits, deductions, and just planning. Like, you need to plan for things instead of doing after the fact. A lot of people get so mad when they owe a lot of money in taxes or they get a big refund and they have no idea why. It's because they're doing no tax planning. So work with a tax strategist, not just a tax preparer. A tax preparer is someone you give your box of receipts to or you give your books to, and there's nothing else that's done. They're doing the taxes based off of what you give them. If you want to have more done than that, you need a tax strategist, tax planner, someone who can help you implement tax strategies and plan throughout the year. Otherwise, you're just getting it done after the fact based off of what was. You can't change what was. You know, what happened last year as of 12/31 is final, it's done, you can't change it. Tax planning is, let's work on it now throughout the year so that we can change what the tax outcome will be next year. Another item I see people make a mistake on is not having a CFO or a bookkeeper. So every business needs a CFO and a bookkeeper. A lot of the small businesses, they feel like they can't afford it. So they just don't do it. They do it themselves. And again, you don't know what you don't know. But if you think about it, all of the large businesses have a CFO. They have an accounting department. Their CFO is looking at things big picture and looking at all the different things, looking at what's working, what's not working, helping the management make those decisions that need to be done. So if you don't have a bookkeeper and a CFO, you are missing out on insights to your cash flow, your profitability, your compliance. You really need to sit down and get professional help to be able to make confident business decisions. As a certified CFO, I can come in and I will tell you exactly what's working right with your business and what's working wrong, like what's not working with your business. And then we'll work together on figuring out how to fix what's not working. Like, I want you to reach those goals. I know what your personal goals are. I know what your business goals are because we're having those conversations and talking about it. And then we're looking at your numbers. It's not just the P&L and the balance sheet. We are looking at numbers in a way that you've never looked at those numbers before. And having those numbers, everyone says to know your numbers. Well, it's not just know your numbers. Like, it's really like know your numbers deep down, what they mean, where they're heading, how they've been tracking, and being able to make better decisions for your business based off of them. And again, sometimes certain areas of your business may be going really well, and we can see that. But sometimes there's things that are broken in your business and you don't know what they are. You just know that you're not getting paid enough. You're working too hard. You don't have the cash flow. Things just seem really tight. Like, something's broken, but you don't know what it is. That's when a CFO, like a fractional one, can come in and help you. A fractional CFO you get for a fraction of the time for a fraction of the price. The reason why small businesses don't have CFOs is because CFOs minimum start at $150,000 a year. No one can afford them. Well, the big businesses can, but the small businesses normally can't. So that's what a fractional CFO is. They come in for a fraction of the time and a fraction of the price to be able to help you and give you the same insight that a large business CFO would be able to give you. All right. So if any of these mistakes sound a little too familiar, it's time to take action. Book your free discovery call today. We'll look at your current setup and find those gaps that are costing you money. Let's clean up your books, set up a strategy, and keep more money in your pocket. Thank you.